Hey everyone, welcome back. It's Michael. I am here today filming with none other than Jeff Bay, mortgage broker extraordinaire. So we are talking, this is part 3 of a 3-part series where we are going to actually deep dive and talk more about no-doc loans. So in my world here in coastal Orange County, you know, in the, call it $3 to $5 million range, we deal with a lot of entrepreneurs, a lot of very successful, wealthy people who own their own businesses, and for whatever reason, either may not qualify for traditional bank lending, or just want to see alternative type financing. So we touched on it on the last video with Jeff. Today we're going to dig a little deeper. I had actually a few agents in the area hit me up and just say, hey, I want to learn more about that. I've got clients, so. I'm happy to jump back in. I'm happy to have you back here. We are sitting actually down at the Monarch Beach Club down at the ocean here in Dana Point, California. So welcome back. What's up, Jeff?
Thanks, man. No, glad to be back, Michael. Thank you for having me.
Yeah.
No, beautiful day, right? I mean, just
this is why we live here.
Yeah, I know, definitely.
This is it. This is the epitome of the California lifestyle. So, listen, as I said, I mentioned to you that the video last week went well, and a lot of people were hitting me up and asking questions. So, I mean, I think just really specifically, if I have a client, let's say, I don't know, a cardiologist has a number of different practices, and doesn't show, he's got a lot of income, a lot of cash flow, but for whatever reason, doesn't want to do a full doc loan.
Right.
Why don't we walk through, let's talk specifically about, how that process works, what size of loans that, you can go up to, credit score, cash flow.
Sure.
You were talking about gifting, all these different things. Let's break that down.
So like you said, so typically for, a no-doc loan, so it's exactly what it means, no-doc, right? So no income documentation, no employment documentation required. And these loans are typically good for people that are really cash heavy. Whether they're self-employed or they're W-2, they've got a lot of cash, but they can't show the income to qualify for this type of loan. And so this particular product, it's actually really, so we can go up to $3.5 million on the first mortgage, and up to $500,000 on the second mortgage. So an example would be if you wanted to buy a house for say $4 million, right?
Okay.
We can go as little as 15% down. The way we'd structure that is we do a $3 million first and a $400,000 second. So 3.4 million. Okay. So the down payment, 15% of 4 million is $600K.
Okay.
So if you got $600K in the bank, you want to buy a $4 million house, and you have a 640 or better credit score, we can do it.
Wow, 640,
yeah.
Okay.
Yeah, no income, no employment, right? You could have no job. You could have money, no job, and you could still qualify for this loan.
What do you have to show? Just bank statements, or?
So the $600K, the down payment could be a gift from a relative. So we follow Fannie Mae guidelines when it comes to gifts. So you can actually get a gift, 100% gift, $600K from a family member. But you would have to have reserves in the bank. So depending on what your credit score is, if you have a 740 plus credit score, we require 3 months reserves. Okay. 700 to 740, it's 9 months. And if your score is 640 to 700, it's going to be 18 months. Okay. So that's the only requirement, that reserve be your money. And what reserves are basically is, so 1 month reserves is equal to 1 month of payment, principal, interest, taxes, and insurance, and any HOA. Yeah. So whatever that payment is, you have to have it. Yeah, PITI.
Yeah, PITI.
You have to have 3, 9, or 12, or 18 months of that in the bank.
Okay. Yeah. And then, but 100% of the down payment can be
100% of the down payment can be,
and as little as 15% total.
Correct. Yeah.
Okay.
Yeah.
And now, so obviously the rates are going to be a little bit. Right now, everyone's focused on rates going up. You can still get rates in the traditional bank financing, 30-year, 3.5%.
So traditionally for a jumbo loan right now, rates are in the high 3s, low 4s. Okay. And they're climbing, right? So if you look at this product, the rates are going to be much higher. You're looking at the mid 5s, but you've got options to do interest only. Okay. So for instance, if the rate's 5.5% and you do interest only for the first 10 years, it's almost like having a principal and interest rate in the low 4s. Okay. Yeah. So almost comparable to what you would get if you were doing traditional financing, showing income, showing employment.
Right. Okay.
Yeah.
Okay. Interesting. Yeah, so
I mean, like this loan's great for people that maybe didn't like show a lot of money on their taxes, but maybe next year or the year after their business is gonna improve and they can show more money in taxes. So it's a great way for them to get in now, in the next 2 or 3 years, refinance into a better loan.
Well, and sometimes business owners, maybe they didn't show a lot of taxes because they had a huge capital expenditure for equipment or whatever. I mean, there's always
tons of reasons. Yeah,
there's tons of reasons. Yeah, I mean, most of the time, frankly, entrepreneurs are trying to obviously minimize their taxes, right?
Right, exactly.
So I mean, but
and they don't mind paying a little bit more to get more too, right? So
yeah, and look, I mean, all of these loans, I mean, we've done hard money loans together that are 8.5%. Sometimes it's just about getting that, especially in this environment where there's no supply, and you don't want to be missing out. Then whatever you got to do to get it, and then you can always refinance out later.
And having an option is better than not having an option at all, too,
are there prepayment penalties for these kind of things?
No. Well, I mean, typically we like to see them keep the loan for 6 to 12 months, but we don't. No one's really paying it off or refinancing within a year. So
keep it for a year.
Yeah, there's zero prepayment penalty. We just like to see them keep it for like 6 months to a year. Yeah.
Right.
Yeah.
But I mean, typically, if you keep it for a year, it's going to probably appraise for more than you paid for it
in this market. Yeah, most likely.
I mean, even as things start to cool or settle a little bit, still likely,
still level out,
especially here. I mean, when you're talking about Corona del Mar, Laguna Beach, Crystal Cove, like these markets are not going to just fall flat.
No.
Yeah. So, all right. Well, that's pretty interesting. I mean, logistically speaking, from the moment I have a client that identifies a house, or do you even recommend maybe getting pre-qualified, or like, can you do a full underwriting of this so you can go in and offer like same as cash?
For this type of loan, we can't like get it in front of an underwriter until we actually have a property that we're gonna close on.
Okay.
But being that there's really not a lot of documentation, it's we can look at it and say, hey, look, this is going to be a good deal. We can make this work, and closing rates are like 100%. So
okay, can we write 30-day escrows?
We can, yeah.
Okay.
Yeah, 30 is probably
comfortable with
30
that?
is comfortable for sure.
30, 35.
Yeah. I mean, so if we're going to utilize the first and the second loan, typically 30 days is great. If we are just doing like one loan, we can do it less than 30.
Okay.
Yeah.
I mean, 30 is usually So, and then what about standard? Like you need an appraisal contingency or no?
So one appraisal, which is great.
Okay.
Up to $4 million. We need that's it basically.
Okay.
Yeah.
Okay. Are there extra fees, or I mean, is there anything else that we should know about that people would want to?
I mean, there's really no extra fee. We obviously, the client and I typically figure out what the rate. We can buy down the rate. We can go in at a rate where I charge my fee and whatnot. But there's no like additional fee for this type of loan.
Wait, you make money on these kind of loans?
Not a whole lot.
Can't you do this for free? I mean, everybody wants me to give back my commissions, but yeah.
Yeah, no.
I'm just kidding. I'm just kidding. Yeah. No, listen, I mean, I think that at the end of the day, like all of us, when you're in the service business, if you provide value and people feel like you're providing value, you bring them something and enable them to get, a loan for a property that they want to acquire. Yeah. Everyone's happy. So
I mean, I think especially with the market appreciating so much right now, people are getting priced out of like what they can actually afford on paper, and so this is just another great option for people that have to go a little bit higher.
Yeah.
So
let me ask you. So up to $4 million, what happens? So I guess if you see a $5 million house, then you gotta come up with the
more
rest
money
of it.
down. Yeah.
And then you said it can be a gift from a family member. The reserves cannot be though, right?
No, reserves have to be your own money.
So up to 18 months.
Correct, depending on credit score.
So I mean, what are we talking about there? Kind of just ballpark numbers. So PITI on $3.5 million loan.
Gosh, so like we just did one for our friend. So $2.5 million. I think his PITI was like $12,000 a month. So he needed 3 months reserve. So $36,000 in the bank.
Okay,
is all he needed. Yeah.
Okay, so you're not talking about a lot of money.
Not a lot of money.
Yeah. If you have a good credit score.
Yeah.
I mean, so you could be jumping into like if you're a younger professional, and your folks want to help you out, you could be jumping into a $3.5-4 million house,
right?
And
if you don't have the reserves, I mean, you can plan this ahead of time, right? If your parents have money, they want to loan you the money, like they can loan you the reserves ahead of time. Let it sit in the bank for a couple months, and then start the process.
Season up. What's that? 2-3 months?
2 months.
2 months.
Yeah.
Oh, that's nothing. Yeah. All right. Awesome. Is there anything else that you can think about that, I mean, when you're out there or when you get these phone calls, like obviously like everything else, when you're thinking about getting loans, don't go buy a new car, don't have inquiries on you. I mean, try and keep
Yeah, we
your
want to
credit.
keep the debt down as low as possible. But again, in this case, for this type of loan, we don't look at your debt.
No,
So
but credit score.
we look at your credit score, right?
Yeah. So you don't want a bunch of inquiries.
But, I mean, you can still have a great credit score with a lot of debt, just depending on what the balances are at that point. So
yeah, absolutely. All right, awesome. Cool. Can you think of anything else you want to add?
No, I think that's pretty much it. I think we're good.
All right, on the next one. So this was a 3-part series, but I feel like we have so much that we can talk about. We're gonna just bring this. This is gonna be next week. We're gonna do number 4 in this series and just keep going, because I mean there's stuff. I even I get calls from people who want to buy a $1.5 million condo, and they've talked to their bank. Maybe they want to explore other options, stuff like that. So I mean, we should talk about first-time home buyers. We should talk about I mean,
investors too. Yeah.
Investors. Yeah. Well, actually, now right now, I have so many investors looking for properties.
Yeah, no, we can talk about how you can buy a home without any income, any employment as well too, as an investor, putting as little as 15% down, just like the no ratio loan, but not having to show that you qualify for that property. So we can do that as well.
It's interesting. I saw an article on Forbes talking about the second home buyer, and there's a huge shift as these second homes are becoming primary homes, right?
Mm-hmm. Yeah.
So it's interesting. I mean, those kind of loans for like secondary homes. Might end up being primary loans.
Yeah, definitely.
Awesome. All right, cool.
Cool, dude.
Until next time.
All right, man.
All right,
Thanks.
man. Thanks.